Good evening, good evening, good evening, everybody. I hope everybody is doing well. Welcome, welcome, welcome. Mastermind 10, my fam. Let me get the screen shared here. Nice, the air just came back on. Nice, nice, nice. Hot here. Let's go. Ding, 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 ding. What a day. I know that there are plenty of you out there who are like, holy shit, and have FOMO, no worries. I believe that I'm about to, trying to get the right word here, but I'm about to deal with a lot of your FOMO by teaching you a strategy and system that will allow you to capture moves that you may have seen today for the rest of your life. So I'm super, super excited. I cannot wait. All right. I love you. All right, we'll wait just a minute or two before we get started. Had some FOMO watching today. Say my traded if you disobeyed Jake, say I. There was a few I's we saw today. I saw a few people out there taking a few L's. Definitely not ideal, but I didn't see any blowups. I haven't seen. That's a nice part, which is like on some level, it's like a best of a worst case scenario, you know. But in previous masterminds, for lack of better terminology, we had seen visible, vocalized. There's always a couple of students, you know, in the program who trade too early on, and then they vocalize that they blew an account within the first week or so, right? And unfortunately, there's literally nothing we can do to stop that. It's just a trader making an emotional decision. I haven't seen that for Mastermind 10 yet. Fingers crossed. So I'm hoping that my spiel about taking patience and the discipline, I'm hoping it really stuck. And I think that just from seeing former classes and having them all tell you guys and gals not to trade, I think that it really did stick a little bit. So I know it might be painful on days like today where you happen to see several trades winning over and over again. However, I don't want you to think about that. I more want you to focus on, okay, am I understanding everything that we're covering so far? And am I understanding how to apply this in my own actual trading in life, right? So in our first lesson, we covered our broker breakdown, right? Again, an integral part of what we do, so you can have your screens laid out the exact same way as I do. And this is very much going to come back into play in our lesson 5, right? Next, in the second portion of our program, in our second lesson, we did a very thorough breakdown on risk, right? In that conversation about risk, we talked about a variety of different things. We talked about defining. I hope that you all saw that that was not your typical, usual risk management conversation, where you get a boring set of rules that you don't really end up following, and you don't really have. Hopefully you all see that I'm truly trying to go above and beyond the sense of, okay, here's what people teach about risk. Here's what you really need to know about risk. Right? So we did a deep conversation as well as covering some of the psychology pillars that we use to keep ourselves anchored as we trade each day. Right? Now, as much as I love the first 2 lessons, and I truly, at my core, this program would not be the same if we did not do those first 2 lessons. I am also blatantly aware that the majority of people who come into our program are their first thing, and I know this because this is what I wanted when I signed up for courses. What everyone really wants is the sauce, right? You want to learn the charts, you want to learn the strategy, you want to learn that. I wouldn't teach you anything from the first 2 lessons if I didn't believe they were part of sauce, right? But I do completely understand that this is exactly what I would have been looking forward to as well, right? I 1000% would have and was looking forward to the technical strategy lessons. Right, where we can take an actual deep dive into the charts and start to understand some rationale for how these candles are doing, what they're doing, why they're doing what they're doing, and how do we find good opportunities within them. Now, my favorite part, although it's frustrating in the moment because you all didn't get a chance to participate in the snow trade today, if you stayed patient and following the mastermind sort of guideline, right? Is that what you're going to see on the snow chart after the fact is a whole lot of what we talk about, visualized. A lot of things that we're going to talk about tonight, you're going to literally see on the snow chart. So at the end of the night, while you will only have one, so to speak, of our 3 pieces of the technical puzzle, this is a 3-part series on technicals, right? You are going to be able to see a lot of the stuff that I'm teaching you tonight visibly when you go through and look back at the snow chart, right? So I'm extremely excited to welcome you all to our very first technical lesson. In tonight's lesson, we are going to do a deep dive on our technical system and how we understand the charts. So tonight, I'm going to introduce to you our technical offense as a system, or technical analysis, triangle offense as a system, right? Break down what that means to me, how I use this analogy, why it's important, and everything in between. We're then going to review some live technical analysis. We're going to talk very briefly about support and resistance, because that's mostly tomorrow night, but we're also, again, my support and resistance conversation is not like one that you've heard in the past. We're going to get all the basics out of the way in like a 2-minute slide tonight. We're then going to cover a deep dive on trend analysis, what it is and how we utilize it in our trading. We're going to spend a very brief amount of time talking about patterns. I'm not very big on patterns, and I actually believe that you can cut out every pattern that you've ever heard of except for 3, and we'll talk about exactly what those are. And really, it's just one that I actually use, right? And then finally, we are going to dive into what we refer to as buy and sell setups. This is going to be helping give some rationale and understanding. Excuse me, I had a burp. Covering buy and sell setups is going to help give some rationale and understanding to what I took away from the book, Reading Price Charts Bar by Bar, right? So really, tonight's lesson is very thick. I'm excited to get started, and let's just get right into it. Tonight on for questions, we have Mr. Mike Pepe. Mike Taps is on, as well as Mr. J-Bab. Late game substitution, came in when it was needed. My man, we appreciate you giving Jay much needed the rest day. So any questions that you have that pop up throughout this presentation, I literally fully trust J-Bab and Mike to answer them the exact same way that I would. Like always, if there's anything that for whatever reason you want me specifically to answer it, just save it till afterwards. As soon as we're in the Discord, I'll answer the question. No harm, no foul. All right, with that being said, let's do it. So first, my friends, for those of you who are brand new as traders, or those of you who have experience as traders, whatever the case may be, in tonight's lesson, I believe that I'm going to completely redefine the way that you look at charts, right? For me, I believe that the way charts are trading as a whole is flawed. I think that there are flaws in the system of how educators teach people to trade. And I understand why. It's because most educators themselves aren't qualified, right? However, and many of you instilled some fundamental errors in your thinking that we're going to have to do a lot of work to reverse, right? So for those of you that are brand new, the 14 of you, while I know some of these things that we are going through tonight may seem fast, I promise you, everyone is jealous that you are learning this stuff for the first time with no bad habits. You are literally in the best position ever possible, because you are not going to have to unlearn some of the things that I'm going to talk about later tonight, which other people are going to have to unlearn. You're in a great spot, right? So with that, I would like to introduce to you technical analysis in a different way than it is mostly phrased. So people often define technical analysis and they go through some big mumbo jumbo definition of what technical analysis is. And in reality, technical analysis is, in my opinion, is using charts to figure out shit, right? Like technical analysis is how we use charts to figure out if there is a trade setting up or not, right? It's how we use the charts. That's really the most simple way to put it, right? Now, for me, one of the analogies that when I was very first coming up with this program way back in the day, I was thinking of, okay, how can I explain the way that I trade versus the way that most people trade? And one of the things that I did when I was younger is I played a whole lot of basketball. And then once I was not athletic enough to make the varsity team, I then proceeded to coach basketball. I actually coached the grade 1 year below me. Right. And one of the things that I recognized from being younger and around basketball a lot with an analytical mind was that all of these teams in high school and younger were running a very basic offensive system when trying to score in basketball. You don't need to be familiar with basketball to understand it. It was what's known as a set play, right? Essentially, a team would come down the court and they would have a set defined, picture perfect rule of things that they were going to do. One person was going to pass the ball to someone, and because they passed it, when they passed it to someone, everyone runs in a certain direction, right? And it's all very premeditated. It's predetermined, right? You are not caring what the defense does. You have a set thing that you're coming down the court, and that's what you're doing. And that's the way that I felt that trading was taught, and is taught mostly, is that there's this way of thing where it's people teach you, they're like, okay, when the MACD crosses here, you buy, or when the RSI oscillator crosses, you buy, or when you have XXX numbers of confluence, you have trend line support, and this, then you buy, right? And it's like all these different things that's like a set thing that you are telling the market what to do, right? Much like a basketball team coming down the court would not really care what the defense is saying. They're running a set play. They would just run what they were going to do no matter what the defense is doing. Now, in the 90s, a guy came along named Phil Jackson. Don't know if he was the originator of it, but he was definitely the person who made it the most famous, introducing this brand new offensive style system called the triangle offense. He ended up winning 9 championships with it between Kobe Bryant and Michael Jordan. And essentially, the biggest thing that the triangle offense did above all else was when it came down the court, rather than saying, okay, this is what we're going to do, here's the set play, here's how it runs, the triangle offense said, okay, where are the weaknesses in the defense and how can we exploit them, right? And it did have certain rules that it would follow. It did have one when something would happen here, people would do X. There was structure and guidelines to it, but it was a fundamental change in an offensive perspective, right? That rather than enforcing something on the defense, the triangle offense for the first time was reacting to what the defense was doing and finding weaknesses in it. And I believe that that is the way that you have to trade. The market's a fickle bitch, pardon my French for a lack of a better term. She crazy, right? The market is going to do what the market is going to do. We have to learn to react to it, not try and predict or force something upon it. People all the time say, don't predict, react. I get it. I'm not telling you to react, not predict. That's not the big wisdom that I'm supposed to take away from this thing, because I know that's not groundbreaking, right? But in reality, rather than reacting to what the market is doing, we have to just simply digest, right? And have a structure in place for when it does certain things. And what we can't do is force the market to do anything, AKA cross over any moving averages, have any number certain of confluences or MACD crosses, all of these different things, right? That ultimately the market doesn't give two shits about, right? The market doesn't care about any of that. Right. And so rather than trying to force something on the market, we have to ultimately come in and allow our rules and structure to guide us on what the market is telling us. Right. Now, another part of my favorite aspect of the triangle offense is that it has a defensive system built in. Right. So as the triangle offense would come down the court, they'd run their play, whatever, they'd come back. As they were coming back down the court, the way that they would match up with their defenders would be built into sort of how they were running back. Right? That's a long-winded way of saying that we as traders should have some sort of system built into our offense. Like when there's our strategy, our offense, when we're trying to score, AKA make money from the market, right? For those of you that are confused on basketball analogies, don't worry, this is literally the only one, but I just think it's a good one, right? For us, what we want to do is come down that court, right? And rather than trying to force something upon it, listen to what they're going to tell us and have a defensive system built in. Right. For example, yesterday for me was a defensive day. Even though CPI gave some sort of reaction, it was ended up being there was upside moves. It was just hard to trade. Right. For me, I took yesterday as a defensive day. Right. And that was because my system, my strategy, the one that I'm about to teach you, told us to do that. Right. So I love noting that is that our system has a defense built in on days where you believe, no, I do not find opportunities. I don't think there's anything high quality enough. I'm just going to sit back. Right. Now, here's the deal. In order for this triangle offense to work, pause. This one's really cold. Resume. In order for this triangle offense to work, there still has to be some structure to it, right? Michael Jordan and Kobe Bryant didn't just come down the court and do whatever they wanted. Everything was extremely calculated. And not only everything that they did was extremely calculated, but every single detail of what their teammates were doing was extremely calculated. And what those teammates and Kobe and Michael themselves, how they figured out what they were going to do was based on this structure and set of rules that they had. So for us as traders, I like to define it as our 5 core rules. Now, over the course of the next 3 lessons, we are going to cover these during each one because I need to sear this shit into your brain, right? These are concepts that are going to take you a little while to understand and to grasp, right? But once you do, you literally know how charts move. It's how it works, right? So first, let's cover our very first technical rule, right? The first rule that we as technical traders abide by. 1, markets are, or assets, right? Our system and strategy works on literally any chart or asset. So Forex, crypto, stocks, futures, options, it doesn't matter. If there's a chart about it, our strategy works, right? As long as there's like an active candlestick chart, right? With enough activity in it that it's not very illiquid, right? So markets or assets are always either trending or ranging. There is literally no in between. It's one of the two. An asset or a chart will either be in a trend or it'll be in a range. That's it. Say it with me, everybody. You have two options when you're looking at a chart. It is either in a range or it has a trend. There's literally no other option. So when you are looking at a chart, starting to figure out, okay, what's going on here? The first thing you want to ask yourself is there a trend or is there a range, and what time frame am I even talking about that on, right? So first of our rules, markets are always, always, always 100% of the time either trending or ranging. Second rule that we have is that the break of a previous candle high or low should, quote, should get continuation in either direction. So if you're looking at one individual candle, it does not matter what time frame you're on. If you're looking at one candle and the next one breaks that candle's high, in theory, we would expect that chart to continue going higher, right? It's not too complicated at first, right? Just understand these ground rules. Again, for any of you that feel any bits of confusion, I promise you it gets sorted out, right? But just take that concept and then start to really sear it into your brain and think about it. The break of a previous candle, high or low, should get continuation in that direction, right? The reason should is emphasized there, and I've been putting air quotes on it this entire time, is because not everything that should happens in trading does, right? So when what should happen does not, we take that piece of information and we use it as a clue going forward, right? So first rule that we have, markets are always either trending or ranging. Second, the break of a previous candle high or low should get continuation in that direction. Third, when what should happen does not, we take that information as a clue, right? So when what should happen does not, we take it as a clue, we mark it, we note it, and we use it when trying to decipher and figure out, okay, what is that chart doing, right? Next, we have our fourth rule, that is candle analysis is applicable on all time frames. We're going to do a deep dive on time frames in our lesson 5, hands down the most comprehensive deep dive into time frames I assure you that you have ever covered, right? But that is our fourth rule, and it's very important to remember, right? Very important to remember. There's a possibility that, like, I don't know, I might bring this up later. It's almost like I've done this 10 times and everything I'm saying is extremely calculated, but I don't know, maybe not, right? But remember this, candle analysis is applicable on all time frames. Don't care whether you're on a 2-minute chart, 5-minute chart, weekly chart, 10-day chart, 15-hour chart, it does not matter. Candle analysis is the same and it is applicable on all time frames. It's just a different style of trade. If you're using candle analysis on the 2-minute time frame, you're likely in a scalp trade or a very short-term trade. If you're using candle analysis on a monthly chart, it's likely a longer time frame trade because there's more time in that candle. However, all of the analysis you are doing is the exact same, right? Now, our final rule that we are going to cover in depth in tomorrow night's lesson is that markets move from level to level. Now, everyone is aware that the level system that we use is extremely accurate, right? Let's not try to reinvent the wheel here. However, we're going to talk about this a lot more on Tuesday night of next week, right? But it's not so much just the fact that the levels are accurate. It's this deeper understanding that charts have a purpose, right? Like when something goes up and it starts moving up, it's not doing that just randomly, right? There's a purpose in that move up. It's going somewhere, right? It has a target in mind. My theory as to why the level system works is because traders use it, like not the traders use it and we push things to certain targets, right? But the reality is that charts have purpose, right? So when something makes a move from 90 to 100, it's not doing that for no reason. There's a very specific chart reason that that's happening, right? For us, how we've quantified that is the level-to-level system. We know that charts move from one level to the next. So we know if something fails one level, it's usually not failing a level just to hang out for a few more minutes and then eventually make it. It's usually failing one level with the intent and purpose of going down to the next, right? So it's a deeper understanding, more than just understanding how accurate the levels are. It's this concept that I want you all to grasp as much as you can, that charts have purpose in what they do, right? It's not random in any way, shape, or form, right? All right, so now that we have covered those 5 rules, mark them. I should have started with this line. Somebody said this in mastermind chat earlier, and it really, really resonated with me. I do not believe you should try and take notes along the way. Just listen, right? Just sit back and listen to me. You're going to have to rewatch this anyways. Most likely, most people do, and I would advise doing that. Do notes on a rewatch. Right now, just listen, because I'm dropping knowledge bombs, right? But with that being said, 20 minutes in, we have only moved to 1 slide. So I know it's a very thick lesson for sure, right? However, this particular slide, we are going to move very quickly through because it is just a preview into our next lesson, right? However, I always like to make sure that we're on the same page about it. That way we can provide some definitions. And tonight, when we're diving into the charts, nobody's confused on what we're talking about, right? So even for those of you who are 14 that are brand new to trading completely, assuming that you have gone through the beginner's guide, everybody should be familiar with this concept of support and resistance. We are not going to take a whole lot of time to talk about this concept of support and resistance because it's not reinventing the wheel, right? Support is an area where we think of on price as a floor, right? It's an area of demand. Historically, when price goes to that area, we hold. Right. On the flip side of that, we have resistance, which, and again, you can just think of as the opposite of a floor. It would more act as our ceiling. Right? This is an area of supply. Typically, when we get up there, we end up stalling or not being able to break above that price. Right? Now, the reason I go through this slide at all is because I don't like these words. I don't like support, resistance, supply, demand. Yeah. It implies bias. For me, I like that we have a level there. What that level does, I don't know. We'll see. We'll fuck around and find out. We'll watch and see what happens at that level. Right? But to me, these areas of support or resistance are simply a level. It's just a level. It's a pivot. It's an area where we are looking for a reaction. I am not going to assume that I know anything about something being support or demand or resistance or supply or whatever the case may be. For me, everything is universal in the sense that one thing acts as a level of interest to us. It's a reference point where we can look for a potential reaction, right? And that is all the preview that you get into our Thursday night's lesson 5, right? That's just kidding. We have one more little preview here. But before we dive too much into trend analysis, there are some concepts about support and resistance, or really levels, that I want to make sure that we're all on the same page about before we dive too much into trend analysis, right? So there are 3 support and resistance concepts that we are going to cover overall. 2 of them we're going to cover tonight. I like acronyms, or not acronyms, whatever they're called, but the things that like help you remember stuff. It's funny that I can't remember the thing that helps me remember stuff. But I like to use like phrases, trigger phrases, right? So we talked about that a little bit already with the psychology aspect, but in terms of understanding how charts move, these are 2 phrases that I've given that help me grasp it. Again, here, I'm not expecting to reinvent the wheel, but it's going to come back, right? So first, there's this idea and concept of the knock-knock principle, right? And the idea behind this is that the more times the level is tested, and the more times that the level is tested, the more likely it breaks, and the more likely it breaks with power, right? So if you have a level, whether it's acting as support or whether it's acting as resistance, the more times that it is tested over and over and over again, eventually, when it breaks, it'll break with power. The reason I've titled this the knock-knock concept or principle, right, is because the idea is like, if you knock enough times, somebody's going to answer the door. If you just sit there, you just keep knocking, you knock, well, big bad wolf knocks enough, somebody's going to huff and puff and answer the door. Right? I don't think that's the story at all, but that's what we're going with for now, right? You knock enough times, somebody is going to answer. Essentially, you knock on resistance enough, eventually, we're going to break, right? Now, the next principle or concept that I would like you to be familiar with is what we call the Uno reverse. Now, throughout the Discord, you'll hear us use Uno reverse in a few different funny ways, but when referring to it in a support resistance reference point, what it really means is essentially once a resistance or a level is broken, right, a level that's acting as resistance is broken, that previous resistance should, quote unquote, should act as support upon being retested. Once a support is broken, that previous support should, quote, act as resistance upon being retested. Right? So we're going to dive more into these tomorrow night as well as later tonight once we're into the charts, but I wanted to introduce you to these 2 overall concepts, right? First, we have the knock-knock. Second, we have the Uno reverse. Knock-knock, Uno reverse, right? All right, we'll circle back to that in just a wee Next, we are going to spend a very brief amount of time talking about patterns. Patterns. So historically, educators will teach like 10 different patterns, and there's a bunch of these different ones, and there's head and shoulders, and there's, which I don't have like a fundamental problem with patterns. I think there's way worse teaching trading styles being taught out there. But people will teach wedges, ascending wedges, a symmetrical triangle, a bull flag, a bear flag. Then they'll teach a head and shoulders, an FU, a zebra pattern, a dyslexic pattern, which, I fit into that in the realm. Right? In reality, I'm like, oh my God, this is way too much. So for me, I found a way to narrow it down to really, there's just three. You have a bull flag, a bear flag, or a 3-bar play. These are the only patterns that you'll ever see me using, right? I don't like the term pattern because it's too subjective. All these lines on a chart, it's like anybody could draw those. Like my hypothetical 3-year-old kid could draw accurate trend lines on a chart. You know what I mean? Like to me, it's just useless. It's not information that I'm interested in, right? So for me, the only thing that I like to do is bull flags and bear flags. And it's actually much simpler and more straightforward than most educators try and make them, right? For me, bull and bear flags are really just a further extrapolation of a rule that we already talked about, right? Earlier on, we talked about our very first rule, right? That markets are always either trending or ranging. There's no in between. A market either has a trend or it's stuck in a range. There's literally no other option. Right? So this is the definition of a bull flag, a move up followed by a period of consolidation, right? People all the time will be like, oh, you need a picture perfect, this is a bull flag. People will associate this picture with a bull flag. When in reality, I could draw this. Go sideways for a little bit, whatever, it does not matter. That's also a bull flag. I could go straight up and do this, then down, bounce, sideways, and not make it look picture perfect at all. And it's still a bull flag. Okay. The definition of a bull flag is a move up followed by a period of consolidation. In other words, again, it's an extrapolation of our rule, right? That the markets are always either trending or ranging. A bull flag, by definition, is a trend. It's a trend followed by a range. That's it. We have a trend up, we go straight up, and then we go sideways for a little bit, and then we go up again. So in theory, because we know that markets are always trending or ranging, and we know that bull flags are simply moves up, or bull flags, which we'll talk about in a second, move down, we can then take that piece of information and say, okay, most of the time things are either bull flagging or bear flagging. And that's true. Most of the time, stocks and tickers and individual names and trends, what they are doing is either in the middle of a trend or stuck consolidating in a range for the next leg of that trend, or to shift trends and change directions. Those are the only options, trending or ranging, right? So one of the takeaways that I would like you to have from this slide is, again, I'm not trying to reinvent the wheel here and be like, this is a bull flag and here's how we trade them. Trading bull flags is not a strategy. Bull flag is a concept that I want you to understand, right? So again, for those of you who are excited to get to the technical part of it, I hope this is where I take you to that level that you were excited to get to. Trading a bull flag, being like, this is how I trade bull flags, is not like a strategy, in my opinion. It's not comprehensive enough. A bull flag is more just this broad general understanding that the market is always either trending or ranging. And if we find something that trended and then ranges a little bit, right, then we can potentially look to take advantage of the next leg of that trend, right, which is where we want to be. I don't know about you all, but I would way rather be trading during this straight line green up than I would be trading in this sideways portion of it. Personally, I would rather be doing that, right? Now, the one objection that I have once gotten on this portion of that they ask about is people will tell me, hey, Jake, this is an uptrend, right? This green portion of it, that's a trend up. But isn't this these red lines here, isn't this a downtrend technically, which we're going to cover what exactly a downtrend is in like 10 minutes. But people will ask me, they'll say, Jake, aren't we making lower highs and lower lows there? Isn't that technically a downtrend? Right? And what I say to those of you who say that is golf clap, little extra point because you're getting ahead of yourself. What you are talking about is exactly what we are going to cover in our lesson 5, and then you are going to receive 8 other lesson 5s just to make sure that you understand it the same, because we do a different example in each one, right? Because what essentially would have been happening there is the 5-minute chart might have gone into a downtrend, but your hourly chart would have just been consolidating. So it's a little bit of a preview, and I hope that little answers a question to a couple of people who are asking earlier today in the mastermind chat, what is the time frame I would use? 5-minute, 2-minute, 10-minute, whatever. What would you pick if I had to pick? And I was like, stinks to stink. I'm not going to pick. You can't trap me. You can't trap me into picking one. I'm not going to pick. They all are in conjunction with each other. You need to utilize them together or they're meaningless. Right? So we're going to cover that. It's a little, so smart people have asked me about that in the past. They got a smart answer. If you were confused by anything I just said, don't worry. We haven't covered it yet, and we are going to in our next lesson. Right? Now, in addition to bull flags, we also have bear flags, which are essentially the exact same thing, just in the downside. Right? We have a trend moving down, followed by a range of moving sideways, and another trend moving to the downside. Right? So again, that's it. In terms of what we are going to cover on patterns, that's it. We're done. We're going to cover 3-bar plays. That's not really like a pattern that most people cover. I don't want to spend any more time covering wedges or head and shoulders or things that I don't find useful and that I don't believe is a viable strategy, right? So for those of you who are like, oh my God, we're really talking about patterns? No, we're not. We're moving on, because this is all you need to know. You need to understand conceptually what a bull flag and a bear flag is. And aside from that, we're moving on, right? Now, the actual pattern that I use, the only valid pattern, so to speak, that I actually use for entries and exits, right, is what's known as a 3-bar play or an inside bar, right? Now, for those of you who are unfamiliar and did not go through the education section of the MM part of the Discord, we have a full document in there that is several pages long, designed by myself and Ali, that will help break down exactly what this is. But we're also going to cover it right now, but I just want to put that out there. There's a document that gives even more examples, so you can see more lines of it, right? But it's a very straightforward pattern, right? In a 3-bar play, as exactly like it sounds, we are looking for at least 3 bars or candles. Bar and candle is the same thing. We're looking for at least 3 bars of action, right? So in a 3-bar play, first we have bar 1, right? Bar 1 in our first example here is right here. It's this big green candle. So in the first bar of a 3-bar play, what we are looking for from a candle perspective is a trend bar. The definition of a trend bar is a big green or big red candle. This big green candle had a clear trend. It went up, it started lower, and it closed higher. Very clear. It's a trend candle, right? AKA a big green or a big red candle. So the first candle of our 3-bar play here, in this very first example to the left, you all can see is there, right? We have our first candle. We have a big green one. That checks our box, so to speak, when we're looking for how to find a 3-bar play. Next on the 3-bar play, or 3-bar play 1, 2, 3 pattern. It's the exact same thing, right? Just potato, potato, tomato, tomato, right? The second candle we are looking for on a 3-bar play is what we know as a rest bar, right? A rest bar is essentially a pause or consolidative period, right? Now, we prefer when the rest bar is like this number 2 bar here, where it's fully inside the previous day's range, right? But that's not a requirement, right? If there was a little wick above here, I'm still cool with calling that a potential 3-bar play, and we'll talk about that tonight, right? But bar 2 of a 3-bar play that you are looking for is essentially a rest bar. You're looking for the market or that chart, that stock, to calm down and rest a little bit. You want it to pause, right? Now, the third part of a 3-bar play, and where you are looking to enter on that trade, is bar 3 is trend continuation. AKA, you're looking for a continuation of the trend from bar 1. right? So bar one, the first candle here, first candle, bar one, was a trend candle, had a big green bar. Second candle was a rest bar, right? Preferably inside, this one was, but it doesn't have to be. So after seeing 1 and 2, all of a sudden now we're looking at bar 3, or before everyone's saying, okay, that's a potential 3-bar play. I'm going to start looking for an entry, right? So, okay, how do we actually enter based off a 3-bar play? Where is our entry and where is our stop loss, right? So in order to trade a 1, 2, 3/3-bar play, same thing, right? We use an entry at the break of bar 2's high and a stop beneath this low. So we're going to cover this much more and break this down in a lot more of a trend analysis sense in like 10 minutes. So for those of you that are confused or the newer ones, don't worry. I promise you it's all going to make a ton of sense, right? But, right here, if we are following these rules, right? Entries at the break of bar 2's high with a stop loss below bar 2's low. That means we would get into this position as we break above this high and we'd place a stop loss beneath its low, right? That is how you trade a 3-bar play, right? So you can see the same thing here. It's a break above that high. As soon as we break above, you enter the trade. And your stop loss would be as soon as we break below the low of bar 2, right? So it doesn't have to be 3 bars. It can extend for an extra candle or 2, but it's that same concept of taking the break of bar 2 or 3's high with a stop beneath its low, right? Now, here's the really cool thing about 3-bar plays, right? When everything I just told you sounded like a whole lot of like fancy words, right? It was like, ooh, like fancy, like trend bar, then rest bar, then continuation bar, right? That's cool and that's great. 3-bar plays are essentially what? Throw me something in the chat here. 3-bar plays are essential. Inside bars or 3-bar plays or 1, 2, 3 patterns are essentially what? Take a guess. Throw it in the chat. Give me a couple more answers. Tiny trend, rally-based trend, rally-based flags, bull flag, blah, blah. Exactly. There we go. Bull and bear flags, right? Exactly. Right? The definition of a bull flag is a move up followed by a period of consolidation, right? And then a trend, right? A 3-bar play is a trend followed by a rest bar followed by a trend. So do you see what I mean when I said that, in my opinion, they're the only actually useful pattern out there to trade? Is because this is the only thing that gives you an actual definition of, okay, here is how I enter and exit a bull flag, right? Here's how I enter and exit this pattern, right? It actually gives me quantifiable ways and reasons and rationales to enter and exit that trade, right? So in my opinion, everything you've learned about patterns, this is why I say those of you who are new are at an advantage, because on some level, not everything that you know about patterns in the past, but mostly everything, for those of you who have some experience, mostly everything about patterns that you learned before, it's kind of like, I just want you to like toss it, right? I want you to understand about patterns that the concept of a bull and bear flag is a move up followed by a period of consolidation that then gets trend continuation, aka it's trend, range, trend. A 3-bar play is a different way to visualize trend, range, trend. Do you see a theme here, my friends? The markets are always either trending or ranging, right? Now, you can actually see that our second rule would also come into play during our 3-bar play, right? Our second rule was that the break of a previous candle high should get continuation in that direction. If that doesn't happen, we take that information as a clue. Then all of a sudden you stop, you start to extrapolate that piece of information, what I just told you of the rules here, right? The rules being that you should, a break of a previous candle, high or low, should get continuation. And if it doesn't, we take that as a clue. You then extrapolate that rule that we have and you go, oh my gosh, on a 3-bar play, that makes sense because we add in as we break above that high. And oh my gosh, if we fail, we stop going higher and then we get below here, all of a sudden, that's a piece of information, that's a clue that we should take to admit that we are wrong on the trade, right? So why do I spend 20 minutes going over that first slide of those rules? Is because it all ties into everything I'm about to teach you. The markets are always either trending or ranging. And until you understand that concept, you really don't understand why 3-bar plays work. And now that you do understand that concept, now you understand why 3-bar plays work, right? It's a gorgeous, 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 gorgeous sight to see, right? So now that we have covered our patterns, right, the quickest educational section on patterns that you will ever have in a course, as most people try and stretch a whole lot out of them, right? I want to dive into what I call the 3 pillars of our strategy, right? The 3 pillars of what we look for when we are looking to enter a trade from a strategic perspective. Everything we just talked about before was almost like a warm-up. Okay, first, pillar number 1, and we're going to talk about this in depth tonight and in lesson 5, is candle analysis. For us, and I want you to remember the answer to this when I come back and ask you a question later tonight, right? I'm not going to tell you which question, but I want you to remember the answer to this. Candle analysis is primarily for us the system of entry, right? So for us, we look to find a buy or a sell setup, right, to enter a trade, right? And what we're going to talk about in lesson 5 is how that can also lead us to a potential failure pattern and how we can gain some insight from that, right? Ooh, pause. Resume. Second pillar that we are going to also do a deep dive on tonight, but not talk about the most important part of it. The most important part of it we won't cover until next Thursday night, right? But the second pillar that we have is trend analysis. This is very simple market structure. Higher highs, higher lows, and lower highs, right? Being able to identify this market structure gives us a massive edge over other traders that do not have a clear understanding of this market structure. Now, the biggest part about trend analysis is multi-time frame trend analysis, right? Trends are different on different time frames, right? One of the things that you may have heard before is do top-down analysis. Somebody might have taught you to do top-down analysis. You start from the top and then you move down. Boo! We're going to talk a lot about how lesson 5, how I believe that is truly the incorrect way to teach multi-time frame analysis, and how it's actually really important how you understand every time frame and how they work together, right? The third part of our strategy is our level system. This is derived from the hourly chart, and we're going to talk much more about those in our next lesson. Right. So tonight is candle analysis and a part of trend analysis, and let us dive into it. Right. So the reality is that almost all of our trades are based off of trend analysis. Right. Market structure, I believe, is the only indicator that you need. I don't think you need EMAs. I don't think you need the VWAP. If you really love them, I don't hold anything against you for using them. But in my opinion, the only indicator that you need is market structure. The market in and of itself is simply a series of higher highs, higher lows, and lower highs, right? And for us, what we do is quite simple, actually. We look to long higher lows and we look to short lower highs. We like to trade with the trend. And if we're trading with the trend, this is what we do, right? So in order to find these optimal entries with really ideal risk to reward, what we're going to do is ultimately end up combining our trend analysis with candle analysis, right? So combining candle analysis and trend analysis together to determine, is there an opportunity on this chart? And if there is, what would I use for a specific entry on my system? Right? So if we can identify potential higher highs, higher lows, and lower highs, we can use specific candle patterns, not wedges or flags or bullshit, actual candle patterns, bar by bar patterns, to identify potential ideal entries with good risk to reward, right? So that in and of itself is the goal of everything that we do, right? So, all right, my friends, right on time, right at the 5:45 mark, 8:45. Let's take our water and pee break. I personally really got to pee. So I'll BRB. We'll be back in like 3 to 4 minutes, and we're going to dive into the charts, and I'm going to start breaking down trend and candle analysis for you. I'll be right back. All right, BRB. All righty. Welcome back, everybody. That was exactly 3 to 4 minutes. So I hope everybody had enough time to run to the restroom, get some water. Text your husband, text your wife, let them know, oh, we going through the thick sauce, right? So with that being said, my friends, it's important for us to define what itself market structure is and talk about how we use it in terms of finding actual trade opportunities, right? Like we just mentioned, almost all of our trades are based off of trend analysis, right? The market itself is comprised of a series of higher lows, higher highs, right? Lower lows and lower highs, right? So in my opinion, all you need is market structure. Now, what I'm about to show you is definitely not reinventing the wheel here, right? In order to have an uptrend, it consists two things. Consists of higher highs and higher lows. Again, for those of you with some experience, I promise I'm getting to a larger point here. I'm not trying to reinvent the wheel. An uptrend consists of higher highs and higher lows, right? So if we're marking out an uptrend, and I start here, we pull back, we start to move up, we start to pull back, and we start to pivot right there, right? So I'm going to go ahead and go through and mark some of these areas. For our purposes, we're going to assume that right here is an uptrend, right? So I'm going to mark this as our first higher low, right? The next thing that I'm going to then take out and mark is right here as our next higher high, right? By definition, when we broke above, that high right there, we then created a new higher high, right? So right here, we have a higher low, and right there, we have a higher high. Now, again, not trying to reinvent the wheel, but just for purposes of understanding, bear with me. What am I going to write right here? What two letters am I going to write right there? And give me like 20 answers. I want a bunch of people answering. Even if you think the person above you is right, just give me an answer. It's not for social, it's just for me. HL, a whole lot of HLs, and a whole lot of wrong answers, my friends. I love you all, but you're wrong. You're wrong. If I write an HL here, right, what would happen if all of a sudden we went, boom? That's not a higher low. That does not act as a higher low. It just acts as a little rally that before we continue to trade lower, right? So in order for this to be marked as a higher low, right? Or let me pause and go back a second. First, when we're deciphering what we want to mark that as, right? Here, rather than a higher low, what we are going to mark it as is a PHL, a potential higher low, right? Because for us, based on the definitions that we use, right? And not just that we use, that everyone, the world uses for market structure, right? This PHL does not become a higher low until it breaks the higher high, right? So now we see it break the higher high. We see it pull back. We see another go up, right? So boom, next thing you know, right? You have an opportunity to have another higher high and another PHL there. So I'm going to remove that for a second, right? Now, taking us back to our first trend here, right? Or our first line here. Let me mark this up. Get that back. Break to a high. So conventionally speaking, right? There are two main ways that people are taught, and I believe one is just wrong, and the other is not right. It's not wrong, but it's not right. So first, I'd like you all to ask you a question, right? Historically speaking, the very first way that people are taught to trade, right, is this idea of a breakout strategy, right? People will show you a picture of an uptrend, right? And then they'll say, hey, look, when we break that previous high, we always keep going higher, always, right? So the best way to make money is buy when we break that high. Now, usually the form in which that this strategy is taught is with a pre-market high break. So the very first thing that I learned in most traders out there, and I'm curious, how many of you learned that at one point in time or another, a strategy that you used was to identify a high in the pre-market session, and then to buy when we broke that high. Was that a strategy that any of you learned? Yes, 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 yes. How many times did you buy that high and then it immediately flipped around and died on you? You buy, and then instead of it working the way it's supposed to, it goes above the high and then goes boom, right? And it just dies, right? So the first way that most commonly is taught by people is they say, buy the breakout, right? They teach you to buy the breakout, pre-market highs. They go, it's like, let's buy the breakout, right? Eventually, people smarten up and they realize, bro, dude, this doesn't work all the time. Like, it works part of the time, but not all the time. It fails a lot, right? So educators come in, they say, no, don't worry. I got this advanced program. As soon as you copy the advanced program, I'm going to teach you a brand new strategy. I've been working on it for years. Okay, what we do is we don't buy the breakout, right? What we do, we buy the retest, right? So when we come back and we retest, that's when we buy. You buy the retest. Why? Why do we buy the retest? Because former support acts as resistance, the Uno reverse, right? Buy the retest. How many were taught that what you do as a trader, the best thing to do is wait for the break and retest of some way, shape, or form, right? For me personally, I don't have a fundamental flaw. Like, I have a fellow trader, Felony Trades, excellent trader, one of the best I know. He loves break and retests, right? And he crushes it at them. So I'm not knocking this as a strategy, because if you actually wait for the break and retest, it can be great. Here's the problem. How many times have you waited for a break and retest and the retest just never comes? Like, in the very first drawing I had here was very strategically drawn. It breaks above, comes back, does not retest, and keeps going, right? Like, it felt like for me, the vast majority of the time that I was trying to trade, right, I was being taught that, okay, first thing you do is you buy the breakout. Okay, that failed. Buy my next course. Okay, now we're going to teach you to buy the breakout, or to buy the retest. It's the safest way, right? But the problem is then a retest comes and it becomes very unclear on how you enter. It's like, it retests sometimes, it almost retests, but it doesn't. And they're like, oh, I got it on an almost retest. It was strong. I was reading the tape, or some other types of other pieces of information that's really hard to actually gauge, right? And actually use, right? So for me, I don't like to buy the breakout. I don't like to buy the retest only, or necessarily. I don't mind doing that. It's not the only core thing I like to do, right? One of the things that I mentioned earlier on here is almost all of our trades are based off of trend analysis. We trade with the trend, right? So if we're trading with the trend, and this is our chart that we have here, the best potential entry that we can have is not the breakout. It's not a retest that might never come. It's this potential higher low, right? And that's a bad drawing. But it's this potential higher low, right? Because if we can buy here, we can get an entry and be taking some profit when we break that previous high. That previous high that breaks, and so many times you all have bought calls and it fails, right? Well, that's the time where we're taking a little bit of profit on our trade, right? So for us, again, what I want you to remember above all else, right, is we look for trends, and within those trends, right, we look to long higher lows and short lower highs. All right, so let's redraw a new trend here. So we have a trend, goes up, pulls back, goes up, pulls back, goes up, pulls back, up, and starts to turn over right there. Right? So we'll mark this here. We got a higher low. We got a higher low. Right? We got a potential higher low. Right? And along the way, we have several higher highs. Right? So one question that I want to ask you all is right here at this point in time, all of a sudden, something starts to change. There's a characteristical change that occurs right here. Now, during that characteristic change, right, what letters am I going to mark out on this little curve right there? Even if you think the person above you is right, throw an answer in there. PLH. You want it, you want it, you want it. You smart. I got you that first time. I got you that first time with that PLH versus potential high low versus high low. I wasn't going to get you guys the second time. You smart. You know. We got a potential lower high in place there. Now, a question that I would also like you to ask you to answer is that knowing that we short lower highs, right? I'm curious, on a regular basis, is this an area where you would be looking for a short trade? Would you be looking for a short here at this potential lower high? Nah, fam. No. Agreed. I agree with every single thing that you all are saying, right? Because now what could happen? We just double bottom. And then, we just had another higher low, right? So for us, we don't look to short or long until we have a confirmed trend. So for us, what that would be is a break right there. All of a sudden, when we break that PHL, this potential lower high converts into a lower high, a real one. It's confirmed, right? Now, all of a sudden, now we're looking for short entries. Now we have a downtrend. Now we have an opportunity for us where we can look to take advantage of finding a rally and then looking for that potential lower high to short, right? And we get our trend continuation. We get a rally and a downtrend, and a rally and a downtrend. Then eventually, at one point, something will happen where we'll stop and we'll make a potential higher low. And thus, that will shift us in trend. So this, my friends, is truly the way that markets move. The markets move from trend to trend, from uptrend to downtrend, and they usually consolidate along the way. In the process of some of these bigger curves is likely some of consolidation. Things are usually not this pretty, where they just move this picture perfect in a circle, right? If it was, everybody would be rich from trading, right? But the big takeaways that I want you to have from this particular slide, right, is the clear definitions of what are an uptrend, what are a downtrend, and where do we look to trade within those zones, right? For us, we look to trade in long the higher lows, and we look to short the lower highs. This is what will ultimately save us the most headache. The most headaches that come from trading are counter trend trades, right? And I still fall victim to it of myself some days, right? If you trade against the trend, most of the time, what you're asking for is a big fat old headache, right? And the market will happily give it to you. The market has no problems doing that. I mean, it's cool, right? So with that, what we're going to do now is we're going to take what we just talked about in a visualized, non-specific example, and we're going to talk about it in a very specific example, right? So what I'm going to do here is we're going to go and zoom out and view the mRNA chart from several months back. And I'm going to take you through and mark out and break down the exact trade that I took on mRNA using everything that I have taught you so far tonight, right? So first things first, we always have to start somewhere, right? And for me, I actually wasn't trading mRNA all the way back in the day here, right? But we're going to use this point in time as our starting point. Here you can see we have a higher high marked on the chart. We eventually get a pullback. Again, I'm not trading it at this point, so I'm not worried too much about the minutia of day to day. I'm more just looking at the broader overall chart. We get a pullback and a higher low. We get a rally up to a lower high, a potential lower high that never gets follow through. End up getting a higher low here, rally up to a new fresh higher high. And we also establish this little bit of resistance right here, right? Up at like the 180s to 190s area. We then get a pullback. mRNA sets a higher low. We get a rally. mRNA sets a higher high, but also continues to establish this sort of top of a range, so to speak, up here, right? We get a pullback from mRNA. We get a little bit of a double bottom here, both of which act as higher lows. We then get a move up, right, to an area where it's a higher high relative to right here. It's still kind of stuck at this same point in time, right? Still kind of stuck at this level. And ultimately, we get our next pullback into this higher low point. So again, I wasn't trading mRNA right now during this period of time. So there's a reason I'm not taking you through each candle by candle, right, on this, because I wasn't watching it at this point in time, right? So at this point in time, this is just me after the fact marking up where these trend points were, right? But what you can see here is that mRNA has developed this sort of very key level in this green line up at like the 190s area, right? Where we would get the actual specific level from is the hourly chart, and we'll talk about that in our next lesson, right? But you can see that mRNA it's got this zone here, right? It's got this zone, and all of a sudden, once we break this area, after testing it several times, we get a really strong breakout. Now, before we dive into the depths and details of that breakout, what I just said can't help but trigger some memories in my brain of, oh my gosh, it's a rule that we covered earlier today, right? We see a perfect breakdown, an example of our knock knock rule, right? Knock, knock, mother effer, right? Here we see an area where mRNA has established some very strong resistance. It's clear that we have a level there, right? And it's clear that mRNA, whenever it gets to this 190-ish area, it struggles. But it's been testing it a lot. It tested it here, came up and tested this area again here, came up and tested it again here. And eventually, the more times it's tested, the more likely it breaks. And when it does break, it breaks with power, AKA power, right? Like this line here, this level, this move up, that's the definition of power, my friends, right? And it was really that break that ultimately led to this move in mRNA. Just a little side digression there, just to, reinsert one of the things that we talked about earlier. And it was almost like I planned these things a little bit, right? But then we just see trend continuation on mRNA. Again, at this point in time, I'm still not trading this name. For whatever reason, it just hasn't been on my radar very much. I wish it was, because it was very clean price action, but I just wasn't, right? From there, mRNA sets a higher high. It pulls back. Oh my God. Oh my God. Where is it pulling back to? It's almost as if it pulls back and sets in place our second rule here about support and resistance, which is our Uno reverse, right? So as you can see, mRNA does, in this case, while I know we don't always get the break and retest that we want, right? From a general principle perspective, it is a concept that matters. That's why when I go through the break and retest versus the pre-market highs, I kind of trash the pre-market high strategy. I don't trash the break and retest. The break and retest thing is like, I understand it. For me, it's just more of a concept rather than a specific strategy, right? So here we can see this exact concept of the Uno reverse starting to play out. We saw a break above these former highs, this area of resistance, right? This level, this pivot, and then we start to pull back to that area. So we're not necessarily looking to buy as soon as we touch that area. That's not the point of what we're doing, right? But the point of what we're doing and what we're paying attention to is, okay, we know, based on the Uno reverse principle, that once a resistance is broken, that previous resistance should act as support upon being retested. So all of a sudden, it starts to pull back, right? And we in our heads, knowing that rule, say, okay, well, this is the general area where we're going to be looking for a potential higher low, right? In this example, we happen to get that higher low, and mRNA continues on with its trend, right? So from here, we get a break above this previous high. We get a pullback for a new higher low. And at this day was actually the very first day I traded mRNA during this run. I took a day trade during this run. And I was like, holy crap, this name moves really nicely and it kind of just goes straight up. I really like this. I want to trade this more. So for the next several weeks, I decided that I want to trade mRNA, right? However, I know based on these past few days it's moving up pretty quickly, right? So what I'm going to be looking for, based on the system that we use as traders, right, is to trade with the trend. And I'm going to be looking to long a higher low, right? So throughout the course of this move up, mRNA gets minor pullbacks here. You could say it gets a pullback here, and it does, but it's a very small pullback, right? It's 1 to 2 days and then straight up. So I day trade mRNA during this time period, but I'm not able to get a swing trade that I really love on because it's just kind of going straight up. So I continue to day trade it, and I continue to wait, right, for a potential higher low where I can take a swing trade on this name, or a longer frame, kind of a trade where I'm aiming bigger than just like a day trade scalp on something that's extended. Right? So I let mRNA do its thing. It makes this huge rally, makes this huge move, and all of a sudden up here, right around the round number 500, right, it sets in a pretty bearish candle, a pretty harsh red candle to us and to me, signaling that, hey, we're getting ready to start a pullback here. Right? We're going to talk much more about exactly the clues to a pullback in lesson this later in this lesson and in lesson 5, right? But what you can see here is clearly it's a red candle that tries to go higher, and then we start to sell off, and we do so pretty aggressively. We move from 500 down to 360 in like 3 days. So it's a rather aggressive move. But from there, what mRNA has done at that point in time is it's established a higher high. Right? It's put this higher high in place here. So for me, based on our strategy, what I am then going to start looking for is some sort of pullback in higher low to enter, right? So mRNA pulls back, it pulls back, and right here for the first time, we get a break over a previous candle's high in a strong way. It's strong, right? And it kind of sets up what? A potential higher low, right? So after setting up this potential higher low, all of a sudden, looking at the things that I've taught you tonight, without accounting for the rest of our strategy that we cover in the next 2 lessons, based on what we've talked about tonight, this is a general area where I'd be looking for a trade on it, right? I'd be looking for a potential higher low to long with the trend here. And that's exactly what I did. During this area, I looked and ended up catching several day trades, right? Where I took a day trade and ended up selling it either that day or the next day or early next day, whatever the case may be. But at this point in time, I wasn't looking for a big swing trade from here to here. Now, by definition, because we have a potential higher low, I could have been looking for that move. But the reason I wasn't is because this was a very aggressive sell-off from the highs. We've sold off like $130 in 2-3 days, right? So I wasn't super eager and being like, okay, this is going to reverse immediately. I thought it might need a little bit more time to develop. So I day traded it here within this specific candle action, but I wasn't necessarily looking for any intense swing trades, right? So we get a potential higher low here. It sets, it forms, it triggers, it starts to move up, right? Then all of a sudden right here, we kind of start to roll over a little bit more, right? And it looks like we may be getting a PLH, a potential lower high, right? Now, based off what I've taught you earlier tonight, are we looking for shorts right here on this lower high? I mean, this is a pretty aggressive sell-off, right? We looking for shorts right here at this potential lower high? No, because it's a downtrend, right? Because it's down. I saw one question thing that popped up. Would we wait for break? I promise. I based on the way I didn't read your question fully just because I was moving quick. Based on the frame of your question, I'm probably going to answer it in the next like 10-15 minutes, or it'll get answered for sure. Right? I promise. Right? We have this potential lower high here, but for me, it's not interested in short. I'm more watching for some sort of pullback and looking. Okay, are we going to hold this area, or are we going to not hold this area? Right? So all of a sudden, one day, as we're in the middle of this process of me just kind of waiting and keeping this chart of interest, right? We get this green candle here. And this green candle has all the reason and rationale to sell off and go lower. But I start to ask myself the question, I'm like, I wonder if this could be like a higher low, kind of double bottom-ish, that ultimately takes us all the way back to 500. So that's the question that I start to ask myself, right? I'm like, okay, what if this is the potential higher low, right? What if it is? And I'm like, okay, now all of a sudden, based on what we've learned in lesson 2, the next step would be, okay, let's figure out the risk to reward. If we can get an entry above this higher low with a stop beneath it and target that previous high, we can catch about a 4-to-1 trade. 4-to-1 based on what we covered last night. That's pretty dang good, right? Okay, this is of interest to me, right? This is of interest to me, right? I'm gonna drag that to the side for the second. So all of a sudden, this candle starts to become of interest to me. And this is a very real trade that I took that many people who were with me in Sima stocks way back in the day actually remember this exact trade, right? But this was a trade, right, that I was starting to pay attention to it, right? Now, you're going to learn a lot in the next like 10 minutes about what exactly it is that triggers me into a trade, right? But for our purposes right now, right, let's just say that it was the break of that candle's high, right? Just like we drag this R to R tool, right? As soon as we get above this green candle's high, the one I was just referencing, right? Then we can go up and target those higher highs with a stop beneath that candle's low, right? Why above the highs, why beneath the lows? Again, we're about to explain it in just a few minutes, but just bear with me for the purpose of trend analysis here, right? Now, the next candle that we get ends up being a small inside bar, right? Now, it is by no means a 1, 2, 3 pattern, but given the other context that we have about a potential higher low, about an uptrend being in place, right, about structure, all of a sudden, we can then take the piece of information that we learned about inside bars and 3-bar plays earlier, about an entry being a break above bar 2's high with a stop beneath bar 2's low. And I'm like, okay, all of a sudden, this trade just got even more appealing, because now I can enter it on a break of this inside bar's high and keep my stop beneath that inside bar's low. All of a sudden, this trade now for me on this is a 7-to-1 risk to reward ratio. 7-to-1. 7-to-1 is a damn nice trade. 7-to-1 is a very high quality trade setup, right? So moving this back off to the side, we get the break above that candle's high. I've moved my stop. I have my stop loss set beneath that inside bar's low. Right, so put there, stop loss. Again, why that comes from there, if it's not clear, because the 1, 2, 3 right now, I promise it's about to become very, very clear in like 10 minutes. Just stick with me, right? So we have this trend now. So we have this potential higher low. So the thesis of my trade, right, is that I'm looking for a potential higher low here to then go up and take out this higher high, right? So we get a trade that starts to work, right? We get a move up, we get a move up. And again, this is a swing trade for me. So I'm judging it based off of daily candle closes, right? Because I'm using, I took my entry, everything based off of the daily chart, right? So based off of the first 3 days of this trade, I actually did nothing but hold it, right? Because if you're holding this trade targeting up here, right? Based on the chart patterns that we have, there's no reason to sell. We just continue moving higher and we get a strong close, right? So all the way up into this green candle right here, right? I hadn't closed any of my position. Now, I did take a small trim as this green day closed, I think it was like 10% of the position, but not just to like more mentally lock something. But there was nothing that was encouraging me to sell that position as we move through this chart, right? Green candle here, not encouraging me to sell. Green candle here, not encouraging me to sell. Well, then pause. All of a sudden, we get this red bar. We get this red candle, and Jake, it goes from 437 to 416. It's a $20 drop. Definitely not light work, right? Is there anything about this red candle right here? This red candle. Is there anything about this in and of itself, in a vacuum, right, that is going to make me close my position. This red bar right here. Yes, Blue Map, you're the same person that's asking. Please just bear with, like I've said a bunch of times, I'm going to answer it. Just bear with me. All right. Right. But no, there's no reason, right? There's no reason to close that position there. It's setting up exactly what we just talked about, a 1, 2, 3 pattern. And some of you said, no, you can add to it. Well, I didn't add to the swing, right? I did end up day trading this. This set up a nice 1, 2, 3. The gap was nice, right? So from there, there's actually no reason to close that position. So I didn't. I held it and I continued to ride it up. Now, the next day with that big green candle that then closes this gap right here, all of the sudden, right? This is where I take my first big chunk of this position off, right? This is the point in time where I take the first big chunk of my position off, right? The reason that I do that is a few-fold. First, right? Well, let me get some answers in there. Let me get some guesses. Why do you think I sold a good chunk of my position right here at 452? Why do you think? No wrong answers. Gap fill. Gap fill, not bad. Locks and profits, not bad, not wrong either. But yes, dynamic R, right? All of a sudden, right, if we're starting this as a new trade at that green candle, and I'm trailing my stop loss beneath this red one, this pivot right there, right, and I still have the same target, all of a sudden, this is now more like a 1-to-1 R trade. And now all of a sudden, I'm not all that interested in it anymore. So there I take a good chunk of my position off because I'm happy. I got a good chunk, not all of it, definitely not all of it, because hey, guess what? This could keep going higher. And we don't want to sell early. We want to follow our plan, trust our plan, right? So I sold some there, but I definitely still continued to hold some of my position, right? Now, I always ask this next question during the presentation, and usually we get like, I think the last class that was the one to answer it was the only class that ever actually waited long enough for me to actually ask the question before they answered. So give me a full 30 seconds to ask it before you answer, but I want to see. I'm going to ask you a question about these two candles. This candle right here and this candle right here. Now, before you answer it, one thing that I'd like to make clear is I'm only asking you about that candle. I don't care about the candle before. I don't care about the candle after. I don't care about any of that. In a vacuum, when you're looking at this candle versus that candle, this versus that, this versus that, is there any huge differences between these two candles? Go ahead and answer. First candle has bottom wick, one break above the level. I go to the second size, blah, 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 blah. So there were, okay, and I saw some of the last point. No, right? So while some of you tried to get real nitty gritty with me, right? And you're not wrong. You're not wrong. I asked the question that seemed very detailed. So you're definitely not wrong. You're right. This one does have a little bit more of a lower wick. This one's a little bit closer to the bottom. But truth be told, I mean, they're pretty damn similar. Right? Like that, I mean, they're pretty similar. This one is $13. This one from high to low is $17, and the body was $13, right? So I see the differences you were all pointing out, but I mean, they're pretty damn similar. They're pretty damn similar, right? They're very similar candles, right? However, the main difference between them comes from the answer that those of you who didn't fully wait for me to listen or didn't know properly answered, right? Which is that one is an inside bar and one is not, right? One is an inside bar and one is not. And the first piece of information that we need to take from the action that is happening right here, right, is what? The very first piece of information that we want to take and grasp from this comes back from a second rule, the second rule that we ever covered on the day. Oh my gosh, I promised everything would come together so well, right? And I meant it, right? The break of a previous candle, high or low, should get continuation in that direction. So in theory, when we gapped up the next day, we gapped above, but we still, right? We still, in theory, we should have gone higher. We just broke above a previous candle's high. Based on the rules that we know, we should have gone higher, and we didn't. So what did I do at that point in time? I then used our rules to say, okay, when what should happen doesn't, aka we should have gone higher and we didn't, I'm going to take that information as a clue, right? And from there, I'm thinking, okay, right, is this the time to fully close this position? I had sold a little bit more the next day when we were failing the opening print in an intraday downtrend, right? But I asked myself the question, should I fully close this position? Why? Because all of a sudden in the back of my head, I'm starting to think, well, what if mRNA isn't going to go get those new higher highs? Wouldn't that make this the potential lower high? And if it is, I don't want to be a part of that, right? So do I close my position on that day when the red candle closed? Is that when I closed my position, you all think? My remaining one. Do you think I closed it on this day? Right? No. Some say yes, some say no. No wrong answer. No wrong answer, right? If you had done it during that day and you had given me the answer of dynamic R, I would have said yes. That's a valid answer, right? But for me, no, I didn't, right? Why? Because the next day we could have gapped up and just kept going, or we could have, had an inside bar for the next day and then kept going. So I wasn't super, that, but, right? All of a sudden, using the same rule that we have directly above, the next day, the minute that we broke and held beneath the previous day's low, all of a sudden, I'm thinking and following the rules saying, okay, well, we just broke the previous day's candle. We should probably keep going lower. Even if it's just lower in the short term before going higher, we still, based on the rules that I follow, should go lower. And that's what we did, right? We ended up starting to trail lower. We have a very aggressive bar from 450 down to 420. So as soon as we broke that lows, right, I decided to trust and continue and let it go in that direction. If we had broken under that lows, failed, and then started to go higher, that could have been a re-entry, right? Because we could have taken that piece of information as a clue, right? There's all this information as a clue for us, right? So I exit my trade. It was one of my best trades of the year, even in 2021, which is crazy to think about because that was a crazy year. And that doesn't seem like that wild of a move. But I caught it pretty much 380 to 450. Right, which is gnarly on an options, right? On the options. That was a crazy, crazy trade. But from there, I start to sit and wait and digest and wait for the next potential opportunity that presents itself on mRNA. Here we see a potential higher low form. Here we see kind of like this. It's kind of like a double bottomy potential higher low, right? That rallies up. And then all of a sudden, we form this next potential lower high. And this potential lower high ends up being, excuse me, pause. That potential lower high ends up being the lower high that takes mRNA into the gulag, right? So for me, a lot of people ask about news and paying attention to news and all that. I don't give two craps, right? Because in reality, in my opinion, when mRNA made this very aggressive move, right, from 410 to 290 over the course of like a week, right, there was probably some news involved. But in my opinion, the reason it made that aggressive of a move is because at this box right here, at this point in time, the daily trend has shifted. Right? The daily trend has shifted. Right? And we are now in a daily downtrend. And once the daily trend has shifted, a bunch of new shorts are coming in trying to capture that move. Right? So we then see that mRNA continues and pulls back. We have a lower low. Right? We then get this kind of weird ranging rally where you could make the argument that one of these is a higher low, right? Or potential higher low or something like that. And there's a reason that it's so important to use all of the timeframes, right? Because on this time frame, you could make the case that mRNA is developing some sort of trend in that area. But I remember this area very well. And for me, mRNA looked a whole lot more, while it was maybe forming something where it was putting in higher lows, like on an individual candle perspective here, what it really looked like to me on the weekly chart was that really looked like a bear flag. That really looked like a what? A what? And here's what I mean, my friends. When you look at this, I know this chart is messy, so bear with me. But when you look at these three red lines that I've attached together, right, and the candles that associate them, the red lines make it look prettier. But when you look at the stuff inside that red line, most people wouldn't historically think, oh, that's a bear flag, right? Oh, that's a bear flag, because it doesn't fit into that picture perfect definition that people give bear flags. But in reality, what did we do? We moved down and then we consolidated, right? So during that period of consolidation on the weekly chart, the reason I remember that so well is I used that weekly bear flag as a rationale for a short trade on an earnings trade, and it resulted in my very first ever $50,000 day. It's one of my very first ever Instagram videos. It's kind of what blew me up a little bit on social media to like 1,000 followers, was that I publicly, before mRNA reported earnings, I said, hey, I'm going short because of a weekly bear flag. And it was still to this day my best trade ever, like 7,000%. I think the runners went on the daily chart. It was this, but that whole thing, that whole trade thesis on mRNA, the entire reason that I was even open-minded to taking that was because the daily trend had just shifted, right? And the weekly chart was in a bear flag in which the trend had also just shifted. Like I just talked about a second ago, I believe that mRNA got aggressive to the downside once the daily trend started to shift. Well, right here, while it might be lost in some of this shuffle of chaos of typing, here we had an uptrend. mRNA shifted to a weekly downtrend. So when it shifted to a weekly downtrend, I was looking for that trigger on the weekly chart. And that resulted in a crazy powerful move, right? And in my opinion, while the earnings report had something to do with it, it probably didn't have a whole lot to do with it. I think it was mostly chart because the stock bounced back like a couple of weeks later. So the earnings report couldn't have been that bad. Right. So in my opinion, it was more this chart setup and catalyst that took that to the move that it had, as opposed to the actual earnings report. And that was all based off of everything that I have taught you so far this evening. Right. Pause. Resume. All right, my friends. So I just threw a whole lot of words at you in a whole lot of charts, right? Now, one of my favorite parts about that presentation, right, is this section right here, where we talk about how we look to long higher lows and we look to short lower highs, right? That was one of my favorite things that we talked about. Now, a question that I have for you all, and I want you to be totally honest with me right now, is do you understand this? Do you understand the buy higher lows part? Yes, 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 yes. Okay, cool. Now, do you understand it? Yes. Do you know how to do it? Like specifically, the details of it. No, 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 no. So let's talk about it, my friends. Let's figure out the exact way to take what we visualized here and actually make it make sense on a chart that isn't just so pretty and picture perfect, because the charts don't look like this usually, right? Except you're talking about snow today. I don't know, baby. She looked like that today. I mean, she was just, oh yeah, just up, 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 up. Oh yeah. But I digress, right? So first, what we just spent a significant amount of time talking about, right, is that the market itself is a series of higher highs, higher lows, and lower highs, right? We look to long higher lows and we look to short lower highs. And here is exactly how we do that. We combine everything that we just talked about with trend analysis, and we then add into it candle analysis, right? We add in our very specific defined candle analysis that gives us an actual definition of something that we can look for where it's not subjective, right? So let's do that, right? For us, we use what are known as buy and sell setups in order to find entries on our trades, right? So first, let's talk about something that we would know as a buy setup, right? First, buy setups like we talked about, or like you'll hear now, are for trades to the upside, right? We want to go long, which means we'd be looking for a higher low in order to long it, right? So these are most applicable during with trend plays. Everybody say that with me right now out loud to your computer. These are most applicable during with trend plays. One more time. These are most applicable during with trend plays. If something is stuck in a chop box range, it's not, this is going to be a different conversation, right? That's why we trade with the trend, right? And we'll talk about that much more, of course, right? The most popular question people ask is, Jake, what do we do when we're in a chop zone then? I don't do anything. I wait till we have a trend. Chop is not fun. I'd rather wait for a trend, right? But when we have a trend, this is how we use it, right? And this is how we capitalize on it. So we use what we call buy setups in order to find long entries on our trades. So during an uptrend, what we do is we wait for a pullback to establish support, right? Don't worry so much about that establishing support. Really what you should be worried about is this next line. We wait for a bar to take out the previous bar's high. When a candle takes out the previous bar's high, what that does for us when it's in an uptrend is provide us with two things, a signal bar and an entry bar, meaning a candle that we can literally use for both our entry and our stop loss. Does this sound a little bit familiar? A little bit familiar. 1, 2, 3. This candle was also our entry and our stop loss, right? However, we're not going to see 1, 2, 3 patterns all the time. So we need to find a different way to find entries on a trend, right? So here, let's go ahead and walk through this definition, right? We have something that is in an uptrend and it's moving up, right? It's moving up. All of a sudden, we're like, yo, Jake, this is moving up. I'm trying to get in. What do? All right, we're going to do what we just described in the definition of a buy setup. So we have an uptrend. We're going to wait for a pullback to establish support and then a bar to take out the previous bar's high. So, okay, that happened. So, all right, we get this move up here. Okay, right here, we take out the previous bar's low, right? Which by taking out the previous bar's low, based on that rule we have, like that rule we got, like, you know, I'm talking about rule number 2, right? Where the break of a previous candle high or low should get continuation in either direction, right? Here we can see when we break beneath that candle's low, we start to get a little bit of a pullback. So, all right, we've done our job so far. We've waited for an uptrend. Then during that uptrend, we've waited for a pullback, right? Now, a pullback to establish support, so to speak. And how does it establish support? What does it do? A bar to take out the previous bar's high, right? So let's say that we were sitting there waiting. Sitting here waiting. All right, this candle right here, do we break above its high? No. So based on our rules, we don't do anything. Next green candle right there. Oh, that looks nice. It's a nice green candle. Jake, that could definitely be a reversal candle. It's nice and green. We could for sure reverse there and start going higher. Okay, that's cool. Did we break above previous bar's high? No. Okay, then don't talk to me, right? Okay, well, fuck off too. All right, let's move on to the next candle then. When we go here, it's like, okay, well, circle that. Do we break above that candle's high? No, we don't. No. We get another candle though, and there, all of a sudden, for the first time, we get a bar that breaks above a previous bar's high. Now, breaking above a previous bar's high in an uptrend, right, for us triggers that buy setup, right? Now, like I mentioned, by triggering the buy setup, we have then given ourselves 2 candles, 2 concrete definitions, a signal bar and an entry bar. So for us, a signal bar is the bar that signals to us that there is a trade forming, right? This bar or candle, same thing, potato, potato. This bar provides both our entry and our stop loss, right? So here, right there, when we break above that previous candle's high, right? That is our entry. That is where we would enter that trade, right? Because we're breaking above the signal bar's high, right? Signal bar for buy setups. The entry is above the signal bar's high. The stop is below the signal bar's low, right? So now I get two most popular questions that I know have already been flooding the chat, even though I promise you all, I answer everything on this naturally in the presentation. This is the one slide, and this is probably my fault because I should have warned in the beginning not to ask questions too heavily because I'm probably going to answer them naturally throughout the course. But truly, this is the one where most of the time it ends up happening, right? So the two most common questions that are asked from this point in time, right, are, Jake, right? What makes this bar, this green one, the signal bar? Couldn't this green one have been the signal bar? If we broke above its high, wouldn't that have been the signal bar? Yup. So we don't know in advance what the signal bar is going to be. Now, are there going to be more favorable signal bars than other, aka more clear signs, like a green hammer, for example, a hammer off of a level, right? A higher low off of a level. Like, of course, not all buy setups and sell setups are going to be created equal, right? However, what makes this a buy setup and what makes this a signal bar is the fact that the next bar breaks above its high. The next candle that breaks above its high acts as our entry bar, meaning that's the candle that we use to enter the trade, right? So the second of those most popular questions that I get asked is, do we wait for the entry bar to close, right? Let me clear this out a little bit. In this example, our entry bar would be this green candle, right? This bigger green one, the one that breaks above that bar's high, right? This one that's in the big circle right here. The question that people ask all the time is, do we wait for that candle to close? No. The answer is no. Why? We already waited. We already waited for our signal bar to close. We have our entry and our stop loss. So as soon as we break above our entry point, that's when we buy, because we already waited for our signal bar to close, right? So if that's been confusing to you, let me take you through another example right now, right? So again, buy setups, by definition, these are most applicable during with trend plays. Say it with me one time. These are most applicable during with trend plays, right? So during an uptrend, which we have here, we have a name that pulls back, it rallies into an uptrend, and it starts to pull back, right? We like things that are in an uptrend. So what do? We follow our rules, right? And we wait for a buy setup to trigger. But Jake, gosh, this is such a nice 1, 2, 3 pattern. Oh my gosh, can't we do it a little bit? Just with the 1, 2, 3 pattern. It looks so pretty. Well, yeah, I mean, look, I get it. It looks pretty. That does look like a nice 1, 2, 3. But I would ask you the same freaking question I asked earlier. Do we break above previous bars high? No. Then no, fam. We break above previous bars high? Nope. Well, Jake, what about this one? This red one here, it looks like a hammer. It's got that long wick. It's even retesting a former zone. Can't I buy now? Well, did we break above previous bars high? No. Then no. Right? Okay, Jake, what about here? We break above, oh shit, let's go. That's where we break above previous bars high. That is where we trigger our buy setup, right? The entry is above the signal bar's high with a stop beneath the signal bar's low, right? So the reason I picked these two charts specifically to show you is that this buy setup and the picture of it, this looks a whole lot different than this, right? This happens to be a full body green candle, and the next one triggers a buy setup. This happens to be a red candle, and the next one triggers a buy setup. The point of me showing you two different examples of them is that not all buy setups are going to be created equal, right? So how do we tell if something is a buy setup or a sell setup? Because of the definition. The definition, right? During an uptrend, we wait for a pullback in a bar to take out the previous bar's high, right? So we know it's a buy setup if it's in an uptrend and if it's taken out or gotten above the previous candle's high, right? Now, why do we do this? Why do we think that above a previous candle's high is the trigger for a buy setup? Oh, I don't know. It's almost like the break of a previous candle high should get continuation in that direction. And then it's almost like markets are always trending. So we know that if a market has a trend and we take a break above a previous candle's high, oh my gosh, it would continue the trend. It's like these things make sense, right? So for us, right, and the last of these most popular questions that I get asked, right, is Jake, that signal bar there, that red one, right there. You see that next candle, how it's green and it's got that wick down? Do you think I could enter down there, like down here? Could I enter down here? That way I can keep my stop loss even tighter, right there. Could I do that if I was using this as my system of entry, meaning this was a 2 or 5 minute chart? Could I do that? No, mother trucker, because if you did that right before, guess what? You ate a stop for no god dang reason. Gosh dang reason, right? You ate a stop for no reason, right? So in order for you to take a buy setup or a sell setup, you have to have the trigger. And in this case, on buy setups, the entry is above a signal bar's high with a stop beneath a signal bar's low, right? This is how we find our entries into upside trades, right? And we do the same thing for downside trades, right? We use what are called sell setups. So again, these are most applicable during with trend potential plays. So during a downtrend, we wait for a rally to establish resistance, excuse me, and then we wait for a bar to take out the previous bar's low, right? So here we have a downtrend. We get a rally, right? And boom, all of a sudden it's hard to see, but there's this red candle in here that's like a doji, right? It's just like a small little doji, looks like a cross, right? We get that bar. So for the first time where this is a downtrend, we're just going to assume it's a downtrend from up here, right? So all of the sudden now, right, we look for a sell setup. We say, okay, did we break that bar's low? Nope. 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 Did we break that bar's low? Ah, there we go. And that's when we trigger the sell setup, right? So it is the exact same thing as a buy setup, just in the opposite direction. Say with me, everybody. During a downtrend, we wait for a rally to establish resistance in a bar to take out the previous bar's low. Now, during sell setups, right? During sell setups, our entry is beneath this signal bar's low, right? Our stop would be above the signal bar's high, right? So this last example is not the best one, and I meant to take it out of here because it's more meant to be shown in our lesson 5, where we're going to cover a little bit deeper on lesson failures, right? On failure patterns, right? But right here, right, is another good example. We have a downtrend. We have a rally within that downtrend, and here we actually see a break beneath the previous bar's low that gets back above and moves a little bit more to the upside, right? So right here, the reason I am blatantly showing you this one and why I did not remove this one is for two reasons. First, I want you all to know these things, they fail. Buy and sell setups might look amazing right now. They fail. This is the way markets move. And we're going to talk about this a lot more in lesson 5 once we circle back with failures, right? But this is the way markets move. So buy and sell setups fail. This is one piece of the puzzle. And for us, we mainly use this as our system of entries. right? So I mainly use this when I'm stalking like a 2-minute chart, like I'm stalking it for an entry, right? That's the main time frame. That's like the main thing that we use these for. It has other roles, but mostly this is our system of entries, right? And I'm sure you can see why, right? Using these types of bars ends up giving you tight stop losses relatives to the moves that these can be created. These are how you can create really good risk to reward opportunities, right? Right? All right, my friends. Now, the last question that I have for you this evening, and we are right on schedule here. The last question that I have for you this evening, and then this is more just a pure curiosity thing, right? What time frame do you think this chart is right here? This chart right here. And just give me whatever the answer is. It doesn't mean to be right or wrong. 5 minute, 2 minute, 15 minute, 5 minute, 2 minute. There was a daily in there. 5 minute, 2 minute, weekly, daily, hourly, 5 minute, 2 minute. All right, what about this one right here? Same answers. They're going to come flooding in. Various answers. Same one right here. Same question. Answers right. Well, my friends, while we primarily use these for entries and exits on trades, one of the rules that we talked about, and there was 2 or 3 people I saw pop up and get this right, is that who cares, right? Candle analysis, it's applicable on all time frames. It literally does not matter, right? However, this particular buy setup happened to come on what chart? What chart, you ask, my friends? That NVIDIA buy setup that I use as that example takes place right here at NVIDIA 140, 140-ish. And from there, NVIDIA doesn't see a red candle until 210. 145 to 210, straight up, literally straight up, like nonstop, straight up on a weekly chart. And then he pulls back and we get another buy setup. And then it pulls back and we get another buy setup. And then here, let's say you're stalking NVIDIA. You're looking at me, you're like, Jake, NVIDIA looks so good, bro. I want to go long. I want to go long. I want to go long so badly. And I'm like, all right, bet. You want to go long? Cool. What do? No buy? Okay, no entry. No buy? No entry. No buy? No entry. Ah! Buy! Actual entry. Give it. Right? And then, oh my gosh, we get a trending move. Then all of a sudden, NVIDIA gets up here and it starts to do what? Shift trend. We have a potential higher low. Then immediately after, we get a potential lower high. And this potential lower high here leads NVIDIA into a massive downtrend where it ends up getting a weekly sell setup right there. And this weekly chart sell setup ultimately takes NVIDIA without much hesitation down $122 or 44%. All off of one weekly sell setup, 44% move. So for those of you, and I know there was one specific person who asked, they said, hi, I trade 4-hour charts, weekly charts, all that longer time frames. Is Jake's strategy going to be applicable to me? Yep. You're just going to have to be what? You're just going to do swing trades like that. Yep. Candle analysis is applicable on all time frames. Does not matter the time frame. Candle analysis, it's applicable. It works. All right. So these rules that we've started with tonight, my friends, I promised, like I said, give me just a few yeses in the chat just for me, right? Do you see what I mean when I said I'm spending 20 minutes on this because I'm about to tie it all together like a crazy orgy that's like the most beautiful thing that you've ever seen that you don't want to watch, but you're like, oh my God, this is weird, right? That got very weird. However, this was badass. This is very intentional. Every single thing I do, every single word I say in here is calculated. After doing it 10 times, I know how to set something up and follow through with it. I promise you, every single one of our technical lessons is designed to be set up this way. Every one of our lessons as a whole is designed to tie everything together. So within this lesson, I tied some stuff nicely together from early on in the lesson to later on in the lesson. Imagine lesson 8. when I'm tying in shit from lessons 1, 2, 3, 4, 5, 6, 7 in everything that we do, right? So I genuinely hope at the bottom of my core, I know that every single one of you had been waiting to start lesson 3. I genuinely hope that it absolutely knocked your expectations out of the park. I genuinely do. I hope that we cover this. If not, for whatever reason, if not, the levels in multi-time frame analysis, like this was like a warm-up almost. Like this was like child's play compared to what we're about to go through over the course of the next 2 lessons. So I'm very, very excited. I cannot wait. I hope you all have had an incredible time so far in Mastermind 10.0 week 1. This officially wraps up our first week in the program. And I am incredibly excited. I think this class is going so well. Truly, I hope you're all having a great time. I love you all. I will get this recording posted ASAP. Oh my God, here they come. Okay, we're doing it again. I wasn't going to do it, but okay. All right, we're going to do it. Just one time. Just yell, because a 2-hour lesson starting at 5:55, the energy is back. I mean, I can't stop it. I can't stop it. Oh my gosh. I love you all so much. I genuinely hope that this helped your understanding, and seriously, we just keep rolling. We're in the thick of it now. We are in the thick stretch of this program. So get ready for more sauce coming as we go. All right. I love you all so much. I hope you have a great rest of the night, and we'll talk very, very soon. All right. Cheers, gang.